This is Alpha. We continue to talk about the unknown field of stock technical analysis and the self-cognition of traders. We know that people's views are subjective. How can we break away from the solidified cognitive framework and objectively examine our trading logic? This is a very tricky question. In fact, this question itself is a problem. How can people break away from their own cognitive framework? I can't even explain the meaning of this question clearly, so I naturally don't know the answer to this question. But I know that this question is extremely important and must be raised. Next, let me tell you a story of a practical technical stock trader. The protagonist of the story is a folk trading enthusiast named Alpha. After graduating from university, Alpha worked steadily and came into contact with technical analysis of stocks by chance. Alpha thought he had some mathematical talent and easily completed the theoretical study of technical analysis. He believed that under the guidance of this scientific method, the possibility of profit from stock trading could be greatly improved. He dreamed that one day, the income from stock trading could allow him to achieve financial freedom in advance. With years of trading experience and knowledge, Alpha has already mastered various K-line patterns and related technical indicators. He believes that he can predict the future K-line chart trend based on the historical trend of the K-line, and thus decide whether to buy or sell. But he has always been confused about how to set the parameters of technical indicators. We know that the parameters of technical indicators are subjective. For example, some people think that the MACD indicator is very accurate for 22 days, while others think that 24 days is more reliable. This makes the results of technical analysis have a gray area. Sometimes the trading signal may be to hold or to sell. If you have a deep enough understanding of technical analysis, the connotations of some indicators are actually contradictory. For example, the RSI relative strength indicator, it is generally believed that when the RSI is very high, it is overbought, and the stock should be sold at this time. But the moving average indicator shows that it should continue to hold. Our trading experience also tells us that the strong will always be strong. As long as the target is well selected, the pattern should be larger, and don't be scared by false signals. Then the problem comes. Faced with contradictory trading signals, how should we make decisions? This leads to the fact that when a trading signal appears, a practical technical person like Alpha often has two opposing forces in his mind. To be or not to be, we call these two forces the radicals who advocate the execution of decisions and the conservatives who advocate staying put. One day, a suspected buying opportunity appeared. The radicals who advocated buying prevailed, and Alpha placed an order to buy, and then the stock price rose. A few days later, the radicals won again, and Alpha sold and took profits. Successful decision-making and quick profits consolidated Alpha's belief in technical analysis and strengthened his confidence in his own level. Not long after, the second buying opportunity seemed to appear again. After a struggle, this time the conservatives prevailed. Alpha sat and watched, and then the stock price rose sharply. Alpha didn't make the money he should have made, and he was so angry that he beat his chest and stamped his feet, regretting that he didn't listen to the voice of the radicals and missed the opportunity to make money. At this time, something interesting happened. Alpha did not reflect on whether there was a direct correlation between making money and losing money and his personal level. He thought that this opportunity could have been seized, but he missed it because of hesitation. So it's not that there is a problem with my level, on the contrary, it shows that my level is actually very high. Instantly, Alpha was possessed by the king. I am wise, but my ministers have misled me. Okay, the problem has been found, so just correct the technical details and you will be successful. So, Alpha made a little correction to the trading strategy. Then, the third suspected buying opportunity appeared. The radicals and conservatives fought again. In the end, the radicals won and Alpha resolutely bought. In the following days, the stock price continued to fall, and the transaction ended with the stop loss. Next, this happened several times in succession. Alpha was depressed and didn't know where he went wrong. He carefully checked every detail of the trading strategy, but still didn't find any problems. Alpha had a deep self-doubt. Before, he was slapped twice by the market and he could get a candy. This time, he was slapped several times in a row and didn't even see a candy wrapper. What could be more sad than deep self-doubt? Arthur spared no effort to examine himself, but never questioned the effectiveness of technical analysis. Okay, the story is over. This story may resonate with some people. When our FA made money, he thought it was the result of his good application of the scientific theory of technical analysis. When he lost money, he blamed it on his own level, but never questioned the effectiveness of technical analysis. It was like when he was in school, the teacher gave a question and no one could solve it for several days. In fact, it was not because the question was difficult, nor because the students were too stupid. The real reason was that there was something wrong with the question itself. This was an unsolvable question. But only a few people could realize this. The vast majority of people thought it was because the question was too difficult and their level was not good enough. Why is it difficult for people to break away from the solidified cognitive framework and examine the problem? Life is like a play, and we are all in the play. If I break away from life, will I still be me? Almost no one can tell which part of the money earned in trading is luck and which part is due to the use of technical analysis. So I think it is meaningless to invest too much energy in the research of technical analysis. Technical indicators cannot be regarded as the main basis for trading decisions. Of course, I can't say it for sure. It is not ruled out that some lucky people playing on the beach happen to pick up one or two beautiful shells, making their trading strategies shine on a sunny day. But this kind of luck is not something that ordinary traders can replicate. So I have a conclusion. The view on technical analysis reflects a person's self-awareness. How to identify one's own self-awareness is a black box. It's like, want to grab your hair and lift yourself up. Wrong cognition may be the starting point, or even the end point of many people's wrong road. Okay, let's stop here. Thank you for your company. Personal perspective, for reference only, limited level, please think in criticism.